Welcome back to Today Assets Report, your go-to channel for everything crypto, markets, and money. I'm so glad you're here because today is one of those mornings where everybody's watching closely, everybody's holding their breath, and honestly, so far, it's not the disaster people were screaming about all weekend. Let's get into it. Before we do anything, I do want to say a huge thank you to everyone in the comment section who's been sending love and good vibes my way. You guys have been asking about how I'm doing, whether I'm sleeping okay given everything happening around me, and I genuinely appreciate that more than you know. And I'm happy to report. Last night was actually a solid night's sleep. My wife and I went to bed around 11, fully expecting sirens within the hour. And then I woke up, just like that, at 5:30 in the morning. My youngest son came in a little congested, woke me up, and my first thought was, wait, no sirens? We didn't get the first alert until around 7 in the morning. That's basically a full night's sleep for us right now, and I'll take that win. Knock on wood. Let's hope we get more nights like that. Voice, host, Today Assets Report. Now, let's talk markets because that's why you're really here. All weekend long, people were doom posting, fear-mongering, predicting a catastrophic Black Monday opening. And look, as of right now, the markets have not collapsed. I want to be very clear that things are still dynamic and anything can change, but here's what we're seeing in real time. Oil opened up with a pop, pushing all the way towards $75 a barrel. Crypto markets are mostly flat. Pre-market futures are down slightly, but nothing that looks like a full-on panic. Gold and silver are both moving upward this morning, which makes sense given the geopolitical tension. XRP is sitting right around $1.34, down about 1/3% on the day. That's not a collapse. That's not even a bad morning. And the support zone we've been watching at that 134 level, it's holding up in a way that actually suggests it's not the hard wall that some resistance levels have been in the past. We've seen XRP bounce hard at 143 and 127 before. This current zone is softer, more of a buffer than a brick wall, and that could actually be a good sign for what comes next. Voice, host, Today Assets Report. Let me talk about oil for a second because there's a real conversation happening right now about whether crude could hit $100 a barrel. People are pointing to the Strait of Hormuz, one of the most critical oil shipping lanes in the entire world, and asking what happens if that gets blocked during a prolonged conflict. And the honest answer is yes, theoretically, oil could spike hard if that happened. Some analysts are throwing out the $100 figure, and it's not completely crazy. But here's my take. I don't think the United States is going to let that situation drag on long enough to cause a sustained price shock at that level. There are mechanisms in place. Strategic reserves can be released. OPEC has its own levers it can pull to prevent prices from going too high or too low. They have every incentive to keep the market stable. So while $100 is a headline-grabbing number, and yes, it gets clicks, I think the more realistic scenario is that oil spikes briefly and then stabilizes. Could I be wrong? Absolutely. But I've seen this movie before, and the ending usually isn't as dramatic as the trailer suggests. Voice, host, Today Assets Report. Here's something really important to understand about this morning and why the initial fear may have been overblown. When markets get hit by something they didn't see coming, a surprise tariff, a sudden geopolitical shock, something totally out of left field, that's when you see the algos go haywire. That's when the cascading liquidations happen. That's when people who were heavily leveraged long get absolutely wrecked in seconds. But this situation, this built over weeks. We were talking about it. We were watching the signals. We were dissecting the probabilities in real time. By Friday, there was already a very high likelihood that something significant was going to happen, and the stock market started pricing that in before the weekend even started. So when something isn't a surprise, the market's reaction tends to be a lot more measured. There aren't as many people sitting on massive long positions right now because the market has already been trending down for months. That changes the liquidation math entirely. There simply isn't as much kindling for a fire right now as there was, say, back when that surprise tariff announcement sent everything into chaos. Voice, host, Today Assets Report. Speaking of leverage, I have to bring this up because it was one of the wildest things I saw last night, and it's a perfect reminder of why you have to be incredibly careful. There was a whale, a big player, who opened up a long position on Bitcoin with extremely high leverage. We're talking 40, 50 times leverage, and they got liquidated fast. $42 million gone in what felt like a blink. Now look, I'm not here to laugh at that or make anyone feel bad. I'm here to learn from it and make sure you do too. Leverage is a tool. In the right hands, at the right moment, with the right risk management, it can absolutely multiply your gains in a way that feels almost magical. But when it flips on you, and sometimes it flips for no reason that makes any logical sense, you can lose everything before you even have a chance to react. If you're using leverage, please be thoughtful about your position size and your liquidation levels. Don't get caught being the cautionary tale that someone else tells on their channel. Voice, host. Today, assets report. Now let's zoom out and look at the bigger Bitcoin picture because there's a stat floating around right now that I think deserves real attention. February just closed red. That means Bitcoin has now had 5 consecutive months of losses. And here's the kicker. January and February both closing red back-to-back has literally never happened before in Bitcoin's history until right now. We're in uncharted territory in that specific sense. But, and this is the part people are sleeping on, if March also closes red, it would only be the second time ever in Bitcoin's entire history that we've seen a streak like that. And you know what happened the last time we saw something similar? Back in 2019, after that rough stretch, Bitcoin went on a massive 5-month run to the upside. Now, past performance doesn't guarantee future results, I'll always say that. But the historical context here is genuinely interesting. If we're near the bottom of this pain cycle, the recovery on the other side could be significant. One more rough month and then a real rip upward. Maybe. We'll see. Voice, host. Today, assets report. Let's talk about the data coming out this week because this stuff actually matters, and it could move markets in ways that have nothing to do with missiles or oil prices. We've got ISM manufacturing PMI data dropping, which gives us a read on how healthy the industrial side of the economy really is. We've got jobless claims coming in, which is always a market mover. Retail sales numbers are on the calendar. And then on Friday, the big one, we get the February jobs report. That's the kind of number that can flip sentiment fast. If the jobs number comes in hot, it reduces the chances of a Fed rate cut, and that tends to weigh on risk assets, including crypto. If it comes in soft or disappointing, suddenly rate cut expectations start creeping back up and markets tend to respond positively to that. So even with everything going on geopolitically, don't take your eyes off the economic calendar this week. The macro picture and the geopolitical picture are running simultaneously, and you need to be watching both. Voice. Host. Today, assets report. One thing I also want to bring up, and I know some of you have been following this closely, is the Clarity Act and the broader market structure bill that's been working its way through Congress. Now look, with everything happening on the world stage right now, it's easy for that legislation to get pushed to the back burner. But President Trump has people in his administration whose entire job is to push this forward. David Sachs and the crypto-focused team around him, these are people who have made digital asset regulation a genuine priority. Brad Garlinghouse over at Ripple has been extremely vocal and extremely positive about where the market structure bill is heading. The talk is that we could see real movement on this in the second half of the year, with some optimists saying possibly even by end of March. Now, I'll believe end of March when I see it, but the trajectory is positive. The regulatory clarity that Bill would bring to XRP specifically and to the broader crypto market is something that institutional money has been waiting for. When it comes, it could be a major catalyst. Voice. Host. Today. Assets report. And while we're on the topic of XRP, let me share something I've been watching that I found genuinely fascinating. There's an exchange called Bitrue, and I want to be upfront that they are not one of our channel partners. I have no affiliate relationship with them, but their social media activity lately has caught my eye because they are posting almost exclusively about XRP. And what they're saying is pretty striking. They're reporting that XRP purchase volumes on their platform are outpacing sell volumes by more than 2 to 1. They're attributing this to what they're calling a silent accumulation period, where institutional investors have been quietly building XRP positions since the launch of the XRP ETFs. And the numbers they're citing are not small. They're reporting net inflows of over $1.1 billion, with positive weekly inflow numbers and negative outflow days totaling just 5 across the entire period. 5 days of net outflows. That's remarkable consistency. Whether BitTrue has a reason to be bullish on XRP or not, that kind of data doesn't just appear out of nowhere. Voice, host, today, assets report. Now, I want to address something that comes up in the comment section constantly, and I think it's worth taking a moment to really think about it seriously. If XRP does a 100% move from current levels, if it doubles and gets back toward 260 in the next couple of months, are you happy with that? Because some people would absolutely take that trade. Double your money in 2 or 3 months? That's an incredible return by almost any measure. But then there are people in this community who have been holding through everything, who have watched the charts, who have heard about Jay Clover's domino effect theory, who believe that XRP is destined for triple-digit prices. And for those people, a 100% move might feel like settling. And neither position is wrong. It depends entirely on your goals, your timeline, and your financial situation. But I think it's worth sitting down and actually asking yourself that question honestly. What are you waiting for? What would make you satisfied? Because if you don't know the answer, you'll never know when to act. Voice. Host. Today Assets Report. Let me also bring up the geopolitical picture more broadly because I think it's important to understand what we're actually looking at here in terms of the conflict and how isolated Iran really is right now on the world stage. Yes, Russia is theoretically an ally. Yes, China could theoretically apply pressure or offer support. But Russia has its hands completely full with its own situation. And China, I genuinely don't think they want to wade into this and risk their economic relationships with the West over it. So what you're seeing is Iran increasingly standing alone on one side, while essentially a coalition that includes the United States, Israel, and potentially France, the UK, and others is aligned on the other side. Trump last night said this could potentially last around a month, which I'm sincerely hoping does not happen. But even if it does, when one side is isolated and the other side has overwhelming support, these situations tend to resolve faster than the headlines suggest. Polymarket, the prediction platform, is already flagging this as fluid and fast-moving. Voice. Host. Today Assets Report. I also want to touch on JP Morgan because this keeps coming up on my timeline and I think it signals something genuinely interesting about where we are in the maturation of the crypto market. JP Morgan, the company whose CEO famously called Bitcoin a fraud, the company that has been one of the loudest institutional voices against crypto for years, appears to be softening its stance. There are reports and signals suggesting they're becoming more positive on the market structure bill and on digital assets more broadly. Now, when the biggest and most establishment of establishment banks starts moving in this direction, that tells you something. It doesn't mean they're going to become crypto evangelists overnight, but it does mean that the institutional wall of resistance is crumbling, and that matters enormously for where capital flows over the next cycle. Smart money doesn't announce its position before it takes it. By the time JP Morgan is publicly warming up to crypto, there's a very good chance a lot of positioning has already happened quietly. Voice. Host. Today Assets Report. Here's what I want you to keep in mind for the rest of today specifically. The overnight and pre-market trading numbers that you're seeing right now are low liquidity environments. Bots can push those numbers around pretty easily, and they don't necessarily reflect what real institutional and retail buying and selling looks like once the actual market opens. 9 o'clock Eastern Time, that's when we'll really know something. When the U.S. stock market opens for real and we see how the broader indices react to this weekend's events, that's when crypto will get its clearest signal of the day, We've seen it happen many times where crypto looks okay in the early morning hours and then either gets dragged down when stocks open badly or gets a boost when stocks open stronger than expected. So don't make any snap judgments based on what you're seeing right now in pre-market. Wait for 9 o'clock. Watch the first 30 minutes. Let the market tell you what it wants to do before you react to it. Voice, host, Today Assets Report. I also want to be real with you about the personal side of all of this because I think it's important that you understand the context from which I'm broadcasting. Living in an active conflict zone while also trying to track global markets and give you guys the best analysis I can, it's a lot. When there's a siren, I stop the video, I get my family to safety, and then I come back. That's just the reality right now. Yesterday was a difficult day. There was a rocket that landed directly on a bomb shelter and people were hurt. And that's not something you just process and move on from easily. But I'm here because this community matters to me, and because you deserve consistent, honest, real-time coverage even when the world feels chaotic. The kids are going a little stir-crazy being cooped up inside, and honestly, so am I. If it's a quiet afternoon, I'm hoping to take them out, get some fresh air, maybe shoot some hoops. Normalcy in small doses. That's what keeps you grounded when everything around you feels unstable. Voice, host, Today Assets Report. So here's where we land today on Today Assets Report. The feared Black Monday, at least so far, has not materialized. XRP is holding its ground around 134. Oil is elevated but not spiraling. Gold and silver are rising as expected in a risk-off environment. Futures are slightly red but not alarmingly so. The real test comes when U.S. markets open at 9 Eastern, and we see whether institutional players are in panic mode or in buy-the-dip mode. The macro data this week, jobs, retail sales, PMI, all of it matters. The geopolitical situation is serious, but it looks increasingly contained given how isolated Iran is on the world stage. The legislative picture for crypto is moving in a positive direction with the market structure bill. And XRP continues to see quiet, consistent institutional accumulation that doesn't always make the front page, but absolutely shows up in the data. This is not the time to panic. This is the time to stay informed, stay disciplined, and stay ready. Don't forget to subscribe to Today Assets Report so you don't miss a single update. Drop your prediction in the comments, green day or red day when markets open. Let's make a lot of money.